Good morning, everybody. Today we can start cost accounting for CMA Inter paper 8. As you are aware, for group 1, there are 4 papers of which one is costing. Costing is the most important paper for cost accountants as it is the vital paper or key topic for you to study. Before starting study, I would like to enlighten you as to the weightage, paper pattern, etc. Over your syllabus, question paper pattern, chapter wise weightage, marks, etc. Because before starting study, we should be aware of how the exams are being carried out, or what is the paper weightage, what is the mark, etc., and paper pattern. Then only study will be effective. So, paper 8, as you are aware, covers 100 marks paper, 3 hours duration, and it MCQ type question is there, that is multiple choice question. Fill in the blanks are there, true or false questions are there, and these type of questions covers for 20 marks only. Rest are problem purpose, and problem also will range from 2 marks to 12 marks. 6 chapters alone are there in the paper 8. Relative weight is cost accounting techniques. Last chapter. Marginal costing, standard costing, budgetary control. Exclusively problem paper. That covers 30 marks. So that's the importance of chapter 6. Very important chapter is chapter 6, marginal costing, standard costing, budgetary control. The importance lies in the fact that this is useful for your group 2 as well as your for final as well as every walk of life. In your employment also, if you are getting an employment, there also these chapters will be useful for you. And second, methods of costing. Methods of costing covering job costing, batch costing, contract costing, process and operating costing. 30 marks. If you cover these chapters plus MCQ, you can easily score 80 marks. Then first primary chapters, introduction, elements of cost, cost records. That is elements of cost means material, labor, overhead, etc. Reconciliation between cost and financial records. Cost accounting standards. Exclusively once cost accounting standard a chapter is there that can be easily studied, and only primary study is intended. You should know the number as well as the heading of the cost accounting standard. There is a tip to study that also can be given. Accounting standards, cost accounting standards, that covers balance portion. 30 30 plus 20, balance will be 20 only. That covers the balance portion. And from there, first chapter, only MCQ or true or false questions will be appearing. No problem. Part is there covered under study note 1, chapter 1. Chapter 1, so we have seen the paper pattern, the mark, weightage, etc. Then you have to analyze or you have to generally understand why costing is important or why costing. Everything, all for all questions or all problems, you can study by analyzing WWWH. WWWH is a technique to write answers for any question. That is, you ask if anything is asked, cost, what is cost, why cost, when cost, how cost is calculated. Not only cost, for everywhere, if you want to write something, a paragraph on any topic, you simply ask few questions yourself. Why, what, when, how. WWW and last one H. Not only for this, for anything. One paragraph you can easily write if you Ask yourself this and write one word at least minimum for all why. So, why costing? Why cost accounting is important or why costing has emerged? That you have to understand basically. That is due to business complexities. Business is not as business done earlier because due to the development in business world, complexities has improved or business has become very much complex. Large scale operation is the order of the day. No firm can operate with a minimum scale or low scale. As you are aware, in your locality itself, small firms has lost the existence. Only big firms can survive because even in small cities, these supermarkets are available, so small firms cannot operate. Everywhere you can find larger and larger business are flourishing and small units are being closed because they are not able to operate with the required profit because of this gigantic firms, existence of gigantic firms. Then competition and low profit margin. Competition is increasing day by day. Competition means there are so many other firms also. In competitive environment, no doubt profit will be small or skin deep. With this skin deep profit, organization has to earn more and more profit by enlarging the operation or scale. The modern trend is to reduce the profit and increase the profit, enhance the profit. How it is possible? Reduce the profit and enhance the profit. If you are taking 1 rupee profit on a single unit, if you can reduce and your sale is 100, if you can reduce the profit margin to 50 paise and sell 500 numbers, by reducing the profit, you can enlarge your sales and enhance your sales. You will get better sales by removing the profit or reducing the profit margin. Entire profit margin cannot be reduced because then firm cannot survive. So profit is essential for growth and survival. That will come later. So in competitive environment, firms should reduce their profit and increase the volume of sales and improve the total profit margin. So that is possible. Two advantages are there. Our profit will be increased. The second advantage is that organizations working as our competitor under narrow level or margin level will close down because they may not be able to operate with your profit margin. So your competition will get reduced when you reduce your profit. Then third is market determined prices. Previously, years back, 2 decades or 3 decades back, organization used to add all their cost and add a profit margin as per policy decision of the management. How much profit is required, that is added. That was the practice followed earlier. Several practices has become redundant now. Now, market is determining the price. If a particular product is you are manufacturing, that product is already available in the market and that may be having a price just below or just above that price, then only you can sell. Not more than that you can charge. Suppose TV is available in the market at 20,000. You can manufacture a TV and sell at 19,000 or 21,000 or in between. Keltron was manufacturing television sets which their cost was around 50,000. Can they sell the TV in the market at 50,000 now? One or two unit can be sold, not more than that. So, whatever price is available in the market, slightly in between that price alone you can sell the product. So, presently, cost plus profit pricing is not at all possible. So market is determining the price of any product. We are not the only manufacturer. Price determination is possible only if you are the only manufacturer. In Kerala, you see KSEB. KSEB is the only producer of electricity. So they can fix the price because there is no competition. Wherever competition is there, wherever other manufacturers are there, manufacturers have little control on price or no control on price. Price is determined by market forces. Then fast changing technologies. Day after day technology is being changed. You cannot imagine the speed at which the mobile technology has changed. Previously, what was the type of the mobile and now what is the type of the mobile? What is the range of price? Price is also getting slashed. For electronic item, it has never increased. It is getting reduced and reduced. So, manufacturers should be aware of this situation, fast changing technologies. Organization which have to survive has to adopt the new technology a step ahead, not later, a step ahead. You know, the scooter or car technology is electronic car is being number of electronic car used in the road, seen in the road is increasing and increasing. So you should think of a situation when petrol car will be less and less demanded. So change in technology, technological change, any organization should adopt even before that is being adopted by our competitor. Then only we can reap the benefit of first mover advantage. For every product, first mover advantage is there. That should be availed for organization to get better results. Then speed of knowledge spread. Knowledge, the spread of knowledge is very fast now. Mobile technology, digital technology, social media, etc. So you are getting the information of all products, all facilities, all price, etc. very easily without any cost. Cost is also very less for getting any knowledge. You can search Google and search engine is there in the Google. Price, anything you can search. So unawareness, there is no problem like that. Every data is at your fingertip. That is the reason why. So then varied stakeholders are there, not a shareholder for any organization. Shareholder means those who are owners. For company, it is shareholder, or others, it is owners. Not only owners are interested in the affairs of the company, the total person who are interested in the affairs of the company, we call it as stakeholders, that is interested parties. And their interest varies. Owners will be interested in getting the dividend or return. Debtors are interested in the solvency as well as liquidity of the company. Local inhabitants are interested in the well-being of the company by way of this pollution-free atmosphere, sound-free atmosphere. Government is interested in the taxes. Workers are interested in their wages, their other amenities, etc. So all the persons in total who are interested in the affairs of an organization is totally called stakeholders, not shareholders, but stakeholders. So, previously, stakeholders were very less. Now, so many stakeholders are there. The position of stakeholders has enhanced or increased. Debtors, creditors, management, local inhabitants, government, tax authorities, all are interested in the well-being of the employees. All are interested in the well-being or profitability or survival of any organization. So, we have to, or any organization have to work in this atmosphere, earning profit. Earning profit also must for an organization for survival. And profit is essential for growth and survival. For growth also, no organization can survive with the same level of operation. It should grow. Every year, the expense will automatically increase. Wages will have to be paid more. Material cost may go up. Expense may go up. All the expense may go up. So, to cover these increased expenses, volume of business will have to be increased year after year, for which organization have to grow. With the same level of operation, no organization can maintain the profit because of the increased expense. So, profit is essential. For growth, you will have to invest more and more money in plant and machinery, etc. For that also, profit is required. For survival also, profit is essential. Public sector enterprises, the survival is under threat because of they are not able to earn profit. Best example is KSRTC. KSRTC is finding it very difficult to pull on because of the loss they are sustaining every day. So, their employees are also finding it very difficult to get their salary and their retirement benefit, etc. So, for organizations, smooth functioning, profit is essential. Profit is essential, and price you don't have any control. So what is the reality is in between this. You can sell a product at rupees 100. While selling the product at rupees 100, if you have to earn 10 rupee profit, you should manufacture that product at 100 minus 10 at rupees 90. That is the reality cost. So cost is a reality and price is a policy. Only by controlling the cost, firm can ensure profit because they cannot, if cost is improved, they cannot enhance the selling price because all others are also manufacturing this product and they are well in the market. So we cannot enhance the price. So all organizations can survive only if they exercise best control over the cost. So target cost is the order of the day. Market price minus the profit required should be the target cost, and that target cost should again be split into element wise. If TV can be sold at the market at 20,000 and you want a profit of 10%, 2,000, you should manufacture the TV at 18,000, which is the target. Then it should be split into material, 10,000 material, 2,000 labor, 2,000 overhead, advertisement, marketing, sales promotion, etc. This much. Totally, it should be equal to or less than 18,000. Then only you can survive. That is the importance of cost, target cost as well as cost. So, cost is the primary consideration of any business unit because selling price is market controlled and profit is essential. Then, in the first chapter, you should have a general understanding of certain terms: cost, costing, cost accounting, cost audit, etc. From where small questions of objective type or true or false type will be appearing in all question papers. In simple terms, cost means expense incurred to get something, expense incurred to manufacture, or if it is service industry, to get something. Expense to be incurred or incurred. Costing. Costing is the technique and process of ascertaining cost. It's only process of ascertaining cost. Cost accounting means process of accounting for cost. Cost audit is also another term which is statutory requirement specified for certain type of manufacturing industries. Companies Act prescribe cost audit branch is there for central approved by central government. For certain organization, cost audit is mandatory. For others organizations, voluntarily they maintain cost records for decision making purposes. All are interested in knowing the cost details because it is essential for decision making. You know, decision making is the essence of management. If no data is available, how can you take the decision? Single product atmosphere is not now there in the market. So many products and organization may be manufacturing and selling under the same brand, same distribution channel. So whatever products are giving them profit, they should be aware and quantity of that product should be enhanced. Whatever products is not giving any margin, management should think of stopping the production of that item so that total profit can be enhanced. So these terms, cost is expense incurred, costing is technique and process of ascertaining cost, cost accounting is process of accounting for cost, cost audit is ordered by central government, by cost audit branch, by Ministry of Corporate Affairs under companies law board. Cost audit, it is ordered for certain types of organization by central government annually or once in 2 years. That organizations, others also maintain cost audit for internal purposes and decision making. That is about cost, costing, cost audit. Then cost accountancy. Cost accountancy is defined as the application of costing and cost accounting principles, methods, and techniques to the science, art, and practice of cost control and ascertainment of profitability. The definition is as given in the text. You should study the definition, at least one definition, so that you can explain if any question is answered from this side. Usually, from this side, objective type of question, MCQ type of question, or true or false alone is seen asked. Still, you should be aware of the definition. So, this is the application. So, cost accounting is a science as well as art. What is the difference between science and art? Yes, If something is true everywhere, we can call it as science. Application of art is also there. If you are creating an artwork, drawing a picture, that is art. You cannot set principles for picturizing or drawing a picture. There is no science, but it is art, the skill of the person applying it. And for science, there will be universality of application. Everywhere it will be giving the same results for science. Then it's a practice also. Cost control. By continuous practice, cost can be controlled and profitability can be ascertained as well as improved. Then scope of cost accountancy. Cost accountancy, for what cost accountancy is adopted? What is the scope of cost accountancy? First is ascertainment of cost. Cost has to be ascertained, then only you can take decision. Then analysis of cost. Cost should be analyzed, then only you can know whether it is controllable, where it can be reduced, whether it cannot be controlled, etc. Controllable and non-controllable or uncontrollable. Control of cost is one of the objective of cost accountancy. Then maintenance of cost reports or generation of cost reports is another objective or scope of cost. Then cost audit. If cost audit is specified for the type of organization, that is essential and will come under the scope. So scope is ascertainment, analysis, control, cost reports and cost audit. Then next small topic is financial accounting versus cost accounting. You might have studied financial accounting in your earlier classes +2 as well as foundation. But costing you may be studying for the first time. Financial accounting is generic in terms and it is under the syllabus in the +2 itself. But cost accounting will be appearing for BCom studies only. First you will be studying for BCom. So what are the difference? For any difference, not only this, for any difference, you just verify the attribute under which head this difference is being counted. If you know the attribute, then you can write the second and third column. Aim. What's the aim of financial accounting? Aim of financial accounting is recording of financial transactions. So in the other side, cost accounting records are maintained cost control purpose, not only recording. So aim is recording of transaction in the case of financial accounts, and in the case of cost accounting, cost control is the primary objective. By whom used? Financial accounts are used by stakeholders. Financial statements are published, and in the case of companies, it is registered with the Ministry of Corporate Affairs. It is filed. Once it is filed, everybody can. It is a public document. So various persons look into our financial statement of any leading company to take so many decisions. Investment decision maybe, purchasing decision maybe, loan. If a bank is giving loan, they will be analyzing the balance sheet. So stakeholders, you have already seen stakeholders mean all those parties who are interested in the affairs of any organization in total is called stakeholders. That can be debtors, creditors, customers, employees, government, bank, financial institutions, local inhabitants, panchayat, so many. All are interested. Then, in the case of cost accounting, management alone is bothered because cost data, no organization will give it to others. It is confidential. nature. So all stakeholders cannot have an access to the cost data, but management alone is interested in cost data for various decision making. Then concerned with financial accounting is concerned with external transactions. That is, internal transactions are never recorded in financial books. Internal transactions alone are primary recorded in cost accounting records. External transactions are not recorded in cost accounting transactions. Mainly internal transactions are recorded. Then next attribute is deal with monetary transactions. Financial accounting, monetary transactions alone are recorded. That is one of the major drawback of financial accounting also. If a company has very dedicated employees and another company employees are not so dedicated, if turnover, profit, etc., both firms are same, balance sheet will appear with the same result. But one firm is having an advantage of having dedicated employees. That is never appearing integrity, honesty of the employees are never appearing in the balance sheet, financial accounts. So monetary transactions alone are recorded in the financial statement. But in cost accounting, non-monetary also will find a place like numbers, quantity, etc. This integrity, honesty, etc. are not recorded in cost accounting also, but non-monetary items like quantity, numbers, etc. are recorded in cost accounting records. Then efficiency of men machines, not considered in financial accounts, but considered efficiency level, performance level, etc. are appearing a place like incentive or performance employees, etc. are one of the feature of cost accounting records. Then financial statements. Usually organizations prepare financial statement which include financial statement include balance sheet, profit and loss account, cash flow, notes on accounts, etc. These financial statements are periodically prepared. Say in the case of listed company, half yearly accounts will have to be published. In the case of others, at least annually they have to file the return with the Ministry of Corporate Affairs. So it is prepared annually. Then cost accounting records are prepared as and when required. If not coming under cost audit, they are voluntarily maintaining as and when required, they can generate the reports and results. Governed by financial accounts are governed by Companies Act, Income Tax Act, etc. Companies, as per Companies Act, we are preparing. As per Income Tax Act, you will have to prepare certain records, and you have to for generally accepted accounting principles and accepted accounting standard, which should give true and fair view of the financial statement. Then, in majority of the cases, cost records are maintained by management itself voluntarily for their own decision making purpose. These are the major differences between financial accounting and cost accounting. So many differences you may find in your book, that also you just to go through. And regarding the pattern, we have already told, your aim should be to, just to conclude, your aim should be to, in this paper 8, you can very easily score 80 plus marks, provided you go through all the problems in the textbook, and scanner is also available, scanner, as well as you should answer previous question papers. Then MCQ in the backside of every chapter, that also you must study. We will be giving all the details, all the problems we'll be doing here from textbook as well as scanner. And my aim is to make you prepared to score minimum 80% marks without much difficulty. I think today we can wind up, and in next class we can continue the same balance topic as well as problem chapters. First priority will be to finish the problem chapters having much more weightage. Marginal costing, budgetary control, standard costing, etc. we can cover first. Also, all portions will be covered on time bound manner. Okay, thank you.